Jiwani, the CFO of the company, now joins in for a more detailed fine print of their earnings. Hi, Mr. Jiwani. Thanks very much for joining in. So this quarter has actually seen the full impact of the withdrawal of Target. Would you now say that the worst is over? I mean, your stock at least seems to be, on recovery path.
Thank you for having me. Yes, you are absolutely right. This is a quarter where we have actually seen one of our largest customer practically not being there. And we have actually shown a growth of 3.9%, which is we could actually demonstrate through the volume growth from other product lines like TT and rugs, towels and rugs. And we have seen a EBITDA margin, while operating EBITDA margin is 23.1, but there is another adjustment which is there as part of extraordinary expense. So if we add back, we are at 24.7% margin compared to 28.2% last year, corresponding quarter. So we have seen an impact of about 1% coming because of the raw material cost, and another 1% is because of the energy cost. And the remaining 1.5% is basically the growth, top line growth, which we have seen. Because of that, we could not absorb the entire fixed cost.
Do you see yourself going back to those kind of margin levels of last year? Those are some pretty heady levels.
So the guidance which we are giving is 22 to 23% margin. So we continue to maintain that, and we have been giving that same guidance consistently.
For FY17?
For next 2-3 years also. So that's the kind of guidance.
Even on the top line, your target of double-digit growth remains unchanged?
Yeah, for the current financial year, we will we will be able to meet our guidance. For the next year, we have already guided for a muted growth because it takes a couple of quarters for us to ramp up the volume. So we are confident that we are now looking at segments because of our innovative pipeline continues to grow very significantly. So we are at almost 36% of our revenue is coming out of innovative products. 16% of our revenue is coming out of our own branded products. So one of our innovation, high-grow cotton, has almost now become a $200 million business for us on an annualized basis. And this is a product which we have now launched in India, and we have seen a substantial traction which we have achieved in India as well. We have seen a lot of promising opportunities coming in hospitality segment. The domestic business, actually, with the GST and the demonetization, India has actually now become a level playing field between organized and unorganized sector. So we expect the domestic segment to actually see a lot of traction in the coming years. And we continue to have our focus on the domestic business.
So just a question also on the rugs business. Earlier you told us that there was an investment of around 600 crore rupees that you were looking to make. Has that entire money been deployed? What's your capacity right now? What kind of utilization levels are you working at?
Yeah, so this is a project which we have announced, which will get actually executed over an 18 months period. So this will be about 8 million square meters. Currently we have a rugs facility at one of our plant in Vapi, which is 8 million square meters and which will increase to 10 million square meters by end of this quarter.
Okay. And, just one question actually before we run out of time, so I want to squeeze it in now. We've seen the US actually taking a lot of, protectionism stance as against trade, especially as far as China is concerned. What's the impact do you see, because of that?
Yeah, so we expect that India textile story actually should gain with this current stance which is there. And because India has a substantial advantage compared to other countries because we are the largest cotton manufacturer in the world. And compared to other countries, we are the only one which has surplus cotton. So that's going to be a substantial competitive advantage for the country, which we expect will help the Indian home textile industry, particularly cotton home textile.
Okay, all right, Mr. Jiwani, we'll leave it on that note. Thanks for joining in and good luck with the